Another video. Now today we are going to speak about or do an update on the situation that we have here on gold from an order flow, fundamental, technical, and sentiment perspective there as well. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like me to cover in my next video. And thank you for all the comments today. It was good to see some people over 1 year in the forex industry, some people 2 years, some people a couple of months. So that's very, very, very good to see. Thanks for the engagement. Now, starting here with the technical data, I think it's as clear as daylight. We've got a double top over here. Now, if you're wondering exactly what's going on here, it's basically what's called a profit taking in the market. So the market had dumped or had crossed above the 2000 mark. So, hedge funds came in and they started buying gold quite aggressively. What we see now is basically just a profit taking, and there's another opportunity for us to start looking for buys on gold there as well. Now, here on the weekly time frame, what do we see? Firstly, we can see the market had broken a very important structure over here. This level over here acted as a resistance 3 times. Market finally broke above that, and we can definitely expect a pullback before the continuation to the downside, to the upside there as well. Now, from a daily perspective, what do we see? Now, here on the daily time frame, firstly, we can see how the market had printed that massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is to take your Fibonacci from the low to the high of the impulse. Now, we can see how the market is currently testing and rejecting the 61.8, and if we look left, we can see the market had previously created structure around the 61.8. However, we would like to see a slightly deeper pullback till there perhaps before the continuation to the upside. But as traders, we have to be reactive and not predictive. Learn to adapt to the ever-changing market environment out there. Now, the best way for us to approach this situation is that we obviously need to wait for the market, for the momentum of the market to shift. There's a good possibility that the market could start rejecting this level because it is the 61.8, and the market has passed off rejecting of this level there as well. But if the market doesn't show us some bullish confirmation from this level, then the best thing we need to do is wait for a deeper pullback to this level, and then we can definitely start looking for buys from here. And as I say, we always have to be reactive and not predictive. We need to learn to adapt to the ever-changing market environment. So that's what we are going to do. Is if the market does start shifting the momentum here from bullish, then we will definitely start looking for buys over here. If we do get a deeper pullback, then that is exactly what we are going to buy from. Now, I said earlier that the pullback that you see over here is basically the biggest speculators in the market taking profit over there, because this is the first time gold has gone over $2,000 per ounce since COVID-19 struck the world. Next thing we are going to look at over here is sentiment data. So what the retail traders are doing in the market, and it's clear as it's obvious that we got 50% of retail traders selling, because that's where they sell. They sell at support, they sell at resistance, and they buy at support. And we can obviously see why they're selling there as well. And then 43% of them are long. Today is Wednesday, so we got 2 more days to this week left. And then obviously from there, we could potentially see going into next week, we could start seeing the pullback from gold. We could even see it happen overnight, but the gold is nowhere near done from rallying to the upside as well. We know that inflation is increasing with the US dollar, and we know that there's still a lot of stuff going on between Ukraine and Russia. So we're done with the sentiment data. So what we're going to look at is the commitment of traders, so what the biggest speculators are doing in the market. Now we can obviously see based on last week's report, hedge funds were quite bullish. Now we can see how they started closing short positions and they started buying. We obviously had that massive spike there going into last week. Next week we could potentially see them adding short positions. Sorry about that, short positions, because we had them close 10,000 short positions over here. Now, next up, we are going to look at this article, because this is part of the reason why gold had started settling. It says here the Ukrainian military has agreed to a 12-hour ceasefire with Russia on Wednesday to allow civilians to escape through evacuation corridors from several cities. Millions of civilians remain trapped in the condition across Ukraine. Now, we obviously know how these hedge funds and these speculators work in the market. As soon as they see that there is some ease or there is some pullback, then they tend to take their money out of the market. And we can see this here once again. So now Russia and Ukraine had agreed to a 12-hour ceasefire, and as a result of that, the markets had obviously react to it as well. So it's very important that we are predictive and not well, not predictive and just reactive, so that we can also go with the way these people are going. So they are currently taking profit, or they've been taking profit, because the eyes started getting big when they saw the market go above $2,000. So then they're like, okay, no, it's fine. We've made enough money. Let's sell it at a lower price. This was the previous low price where they started buying this price from. So we can expect them to potentially come here and start buying this price to the upside again. Next up, we got this article over here. Just the headline: gold ends lower, marks first weekly decline since January on Russia, Ukraine. Developments said here gold ended lower Friday and today. And this is probably, the first steep decline that we've seen since January. But this rally, if you think is over, is still very far from over. This market has to need to must go test. This is the long term target for gold. That's where gold needs to go, and gold is still a very long way from getting there as well. That's the target for gold. If you can get into gold early, okay, early, then you can hold it up to that levels there as well. So this is not done. We're still gonna get a massive bull run coming. Trust me when I say so. Now that's all from my side. I want to say thank you for your time. Thank you for watching the video. And as always, cheers for years.